started going in my mind through all of the patterns that I saw it right away. I went to the 21 and 22. And then when I looked at the chart, that's exactly what it was. Like in this area right here, the MAG 7 was outperforming the market. I see here the same, 17 and 18, 17 and 18. Now, what are those supply spikes that come here? This is profit taking. We're seeing slight deterioration of the upward result. So this suggests some kind of reaction. And what kind of reaction by the analog could we see here? From 19 to 20, pretty sharp, but still within the structure of the uptrend. So we're just touching the lower boundaries of the trend, right? So something that we've done here, something that we've done here. So I'm thinking that the 1920 could be somewhat similar. This is the momentum, so similar to 20 of the COVID low. This is the first momentum thrust. Then we establish the stride. So then 19 to 20 should retouch that lower stride somewhere here. And that makes sense with the strength that we have on the background, just to have a smaller reaction first. And then what do we see here at 20? Short-term oversold conditions, short-term value. Because behind all of this strength now, when they see this short-term value, they're going to say like, oh, I got to be a buyer here because this is a discount. And in both cases, very aggressive recovery. So we might have a case of increased volatility on both sides, up and down at the same time, like going into March specifically, right? Into the end of February, beginning of March. I would be expecting that this is going to be pretty volatile. Then what happens afterwards, after this volatility is done? We're going into the test after the preconditions of shortening of the thrust. And this test is just a trading range. Here as well, shortening of the thrust, trading range, and then we have a more appropriate change of behavior. 19 could be our preliminary supply in all of the logs.